Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Monday. I hope it finds you. I hope you had a great weekend. We're going to have rain in the valley most of the week. One of the few places we actually, we'll do a rain dance if we have to. We'll take all the water we can get. Snow in the high country. Yeah, get your snowboards and your skis out. Head up to Flagstaff. How about the playoffs this weekend? You know, some things never change. You know, when I was younger, the Buffalo Bills, they went to 4 Super Bowls. Jim Kelly was the quarterback, and they lost every one. They went over. And yesterday, the Bills and the Chiefs played again, and the Bills are over against the Chiefs. And it came down to the last second. The Bills had a field goal attempt to send it into overtime, and it was wide right. The only Super Bowl they had a chance of winning, their kicker missed it wide right. The names have changed, Jason. But the same old Buffalo Bills, I guess, some good football playoffs there, at least some exciting games.
Yeah, I didn't watch as much this week, but yeah, I mean, there's always the questionable refereeing and how teams get into position to win by one score week after week. You know, what happened to the dominating team that blew everybody out all the way to the Super Bowl? What happened to those really good teams, right? That's
right.
Mediocrity, parody. Right? They got mediocrity.
Yeah, parody, mediocrity. You said it. 800-951-0592. That is our toll-free number. AllAmericanGold.com is the website. We gave you the weather. We gave you the sports. Now it's time to talk about the financial stuff. It is Monday. We've got Joey Beckles. Haven't had him for a while. We had the holidays, and then he's been super busy. Listen, you got to have people in your corner. We talk about being diversified. We talk about the need, right, to have your 401ks, IRAs, making sure you're set up financially, especially when you get closer to retirement. Talking about taxes. Maybe you got to hand down things. You got property to hand down. You got investments to hand down. You got whatever it may be. You want to make sure that you're doing it right, and maybe you've been doing it right, and you're just too risky in your portfolio. You need to find these things out. That's what Joey does for all of our listeners out there. Joey, it's been a while. Good to have you back.
I know it's been a long time, and it's absolutely wild, but thanks for having me. Good to be back. I'm looking at my calendar. It's already almost February. Time is just flying by, and it's super important. As we're entering this new year, we're entering tax season for a lot of people, that we're just getting things situated right now and getting a game plan going into the rest of the year. And quite frankly, as people start to enter retirement or are in retirement, we really want to make sure with everything you've done, a lot of people do a great job of saving. How do we make sure we implement those dollars and make sure there's more room for error in your retirement space? But most importantly, let's reduce the tax liability. Let's make sure you're doing things more efficient in that space. And overall, we're just helping our clients get a game plan in place, whether it's being more tax efficient, diversifying their accounts, getting all of their 401ks into one spot. You talked about passing down wealth. How do we do that? Legal planning. We do everything. But really what we want to do is just make sure we're helping our clients tackle what it is they're trying to tackle in the teeth. And eventually, after a longer relationship and us working together, we'll attack other areas of planning and opportunity. But I think the most important thing is to help people out here that are listening today. If there's something that's on your mind that you're trying to fix or you're wanting to figure out, give us a call and let's have a conversation about it, and let's help you get on the right track and take a step forward with your financial planning. I think you would be amazed about the progress you can make just by making a tweak or two of things you're doing and not adding on more money you're saving day to day.
are constantly changing. People that have, especially nowadays, it's a little different. The job market's different. People don't normally work for the same company for 20, 30, 40 years like they did in the past, and they're job hopping. They're 3 years at one place, 5 years at the next, 2 years, 8 years, and they've got all of these different 401ks. And one of the things that people don't realize is by having them in all these different places, you're probably paying way more fees than you need to pay, and you're not being as tax efficient as you can be. And these are simple things that people can correct just by reaching out to you.
Yeah, these are simple things that we can help all of our clients get done and figured out. Last week, I have a client who switches companies every 2 years. He's a contractor. We just rolled over 6 of his 401k accounts. That's all in one spot. He's not getting destroyed by fees, as well as he now has a properly diversified portfolio that he gets to look at. All other 5 accounts were doing different things. They weren't singing together in a symphony. And he was also having to log into 8 different accounts, have 8 different passwords and usernames, and that can be a pain in the butt for people. Let's simplify things. Let's put it all in one place. 1, so it's easier for you to track, but 2, we want to make sure you've done a great job of putting that money in the way to a 401k. Let's make sure that money's working the way it needs to be and the way you want it to be, rather than sitting on the sideline and you're losing money and taking unnecessary risks.
We'll be right back with more with Joey, and then Jason and I will get into the week when we return. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Monday. We've got Joey with us from Northwestern Mutual. One of the big selling points, they're not a bank. They didn't need to be a bank. Think about, like Schwab and Goldman and all these other. They all had to become banks during the last financial crisis so they could get money, so they wouldn't have to go out of business. Northwestern Mutual, believe it or not, they're rated higher than the federal government, if you can believe that. It's just one more layer, as far as I'm concerned, that you rather have money sitting there than at these financial institutions. As we've watched, the FDIC, all the big fines that these banks had to pay for Silicon Valley and these other banks that have gone under. Jason, I've been talking a lot about, hey, in the next 60 days, the banks, which have been borrowing, what they're approaching now, well over 150, out of their way to $200 billion to pretend that they're solvent. Joey, we're seeing a lot of people moving money out of banks into money market accounts. They're trying to find places to put their money. You guys do that as well.
We do all of that as well, and we're not a bank, which is fantastic. And I share the same fears as everyone listening today about the banks. I have a checking account at my bank, and that is it. I don't keep that much money in it. All of my money is sitting with Northwestern Mutual, whether it's a money market account or other different instruments. At the end of the day, if I want my money, they're going to give it to me the next day. There's no questions asked. Banks are going to ask and do all these different things to keep their money there. That won't happen with us. And more importantly, with it being a privately held company, they are so highly regulated at doing the insurance business as well that they're investing as conservatively as anybody can imagine. And for listeners here on KHNC Radio, I don't think there's a better company out there that aligns with our conservative values. 1, making sure we protect our principal and the things we've built. Or 2, making sure we're growing our wealth so that it's doing what we need it to do. Northwestern is a fantastic company. They've been around for 170 years. Every single year they pay dividends to their policy owners. No company can say they've done that. And when you want to partner with a company, you want to work with somebody, you want to make sure they have your best interests at heart. And if a company has that track record for 170 years, I feel like they've proven that they do that day in and day out consistently with all the clients they utilize. So I urge everybody, you got a ton of money in the bank, right? You're at the FDIC limit, you're above $250,000. Northwestern has SIPC, which is $500,000. So we insure our accounts even more than the banks do as well. But we also operate at Northwestern with a ton of cash on hand. Every month, they're bringing in $3 billion just from their insurance revenue. They have more cash on hand, which allows them to buy into these different bonds. As interest rates go up and down, they're always buying the better yielding bonds, which these banks and other companies can't do because they're constantly investing every dollar they get. So I urge everyone, you've had the conversation with your spouse. You've been thinking about your legal planning or retirement planning or how to set up your account. Reach out to me at my personal cell, which is 602-909-9048. Again, that is 602-909-9048. If I don't answer, just leave me a voicemail or a text, and I'll get back to you as soon as possible. But I really do think there's not a person out there that we can't help put in a better position than they were yesterday.
Well, and I love, your insurance at $500,000, not $250,000. Just another one of the examples of why we love Northwestern Mutual. I know, Joey, I know you're busy. Thank you so much for being able to spend some time with us this Monday. Hopefully we'll have you back next week. If you're looking at getting some financial advice, make sure you reach out to them, 602-909-9048, and especially all those 401ks you got. Get them all in one place. They charge you a lot higher fees when you no longer work for them. They changed the tax laws, so Joey can educate you on all that stuff. 602-909-9048. But Jason, we've got a slower week this week. We won't have a lot of Fed talk this week, but we are going to get at the end of the week. We'll get fourth quarter GDP, which I think, it'll be a decent number. It won't be 5%, but probably somewhere around 2, maybe 2.5% on GDP. And then that's on Thursday. Then on Friday, we'll get another look at some inflation data. And I think that's kind of what the markets are going to be focused on this week.
Yeah. I mean, We'll see where those numbers go because we're slowly moving into this election season. I'm telling you, I don't watch a lot of the stuff on the primaries, but I dabbled in a little bit of it. Man, are they trumpeting the emergency calls when it comes to this election? Man, they're making it sound like the balance of the world is on this election. It's crazy.
They really do. It's incredible. DeSantis is out now, so I guess Nikki Haley's the last one left, and I think she's about done as well, right? So I guess they're counting on New Hampshire, which kind of always votes a little funny to begin with, but it sure looks like, and we'll see what happens, what other legal moves they can try, but again, I don't know. Trump, Biden, and then you got RFK, right? He's going to be on the independent side.
Yeah, we'll see about Nikki Haley hanging in there all the way to the end. I get this feeling she's going to take her 3% or 8% and go all the way to the convention. Just see what happens, right?
Right? Get some
making the convention, anything can happen.
Right, get those billionaires to finance it, just to say, hey, listen, when we get to the convention, they can all vote for you. Right, because remember, it is a little interesting that this is who we pick, but then they go to the convention. It doesn't have to go that way. They can pick whoever they want.
Yep. So let's just see how it pans out.
That would be chaos. Oh my gosh! I hope
8% Nikki Haley wins it. We'll just see. It just seems something's going to happen. Something's going to happen between now and these conventions. But, so the markets, I don't think, will react too much to these early months. I think we've pegged the end of March as far as some really turbulent economic times, which I think will bleed into the geopolitical. I was just looking at stuff with World War II and other confrontations throughout history, it always starts like a year or 2 or 3 years before the big war happens. So what do we have? We have 2022, we have Ukraine, and now we have 2020, late 2023 with Israel. These things can take a while to sort of boil, and I guess 2024 is kind of like the right time frame. So we'll see, Joe, because we know how economical things are going to get messed up. There's no way they want that to be the leading news article in every paper in the world that the Fed and central banks have ruined the world's economy. They're not going to have that.
Yeah, I know there was a U.S. military base got hit in Iraq over the weekend. How many bombings of Yemen until we officially say that the war is expanded, right? I mean, I don't know, but apparently the Houthis there, they've decided that if you're a Russian or Chinese ship, you're safe. Everybody else, you better buckle up. And it's starting to have an effect. You know, shipping rates have gotten more expensive. I know in Russia, they had one of their natural gas terminals got hit. We'll have to see if that's going to possibly have an effect. It just kind of has that feeling like, what strike, what needs to happen for this thing to grow. Let's hope that it doesn't. In some economic data today, we did get the leading economic indicators, and this is one of these ones where when it stays negative for long periods of time, then you get the big, the boom and bust. When you get the bust, when the LEI, the leading economic indicators, and the bond yield, the inverted bond yield curve, the longer they stay that way, that's when you get the big bust. So the two biggest busts in history, the financial crisis, 07-08, and then, of course, the stock market crash, 1920, the depression of the 30s. Those were the two biggest. The LEI, down again today. It is now the longest losing streak since Lehman, so since the financial crisis. So we've now essentially got the second longest streak ever on the leading economic indicators. It dropped again. The biggest contributor for it being positive was gains in the stock market. So we had December we had that big year-end rally on the Fed's going to cut rates. Unfortunately, the biggest negative was new orders. And I kind of, it is kind of interesting, right, Jason? Wait a minute, we got the stock market flying, and then companies are saying, but, business isn't so great.
No, I know small businesses around here that I've been in contact with. I've been following since COVID what their ups and downs have been, and it was about halfway through last year when all these businesses either slowed to a crawl or they've slowed significantly. And the funny thing is, Joe, at the beginning of 2023, these guys were busy to the hilt, for months out of customers, right? If it's a contractor, now they're a week out, 2 weeks out at most. Some of these guys have no customers coming in. It's showing a tremendous slowing going on, Joe. It's going to come to it's going to bubble up even worse. Some of these small companies aren't going to make it through 2024. These kinds of boom and bust cycles usually weed out all the small banks, all the small businesses. A lot of them just go to the way of the wind. The wind just blows them out of the economy. I just feel a little bit of fear of how many of these small businesses are actually operating here in the near future. You see these. I go to Costco and it seems like they sell the entire world there, right, Joe? Right. It sure seems like that's where we're headed in a fast way.
Well, we made the mistake of going to Costco this weekend. Don't go to Costco on the weekend. That's going to be my new rule. I told my wife, that's it. I'm never going to Costco on the weekend again. I'm sure I probably will, but yeah, in that way, right? Costco's busy. it's busy. You're like, man, this is, look how busy it is. But you're right. It's the smaller businesses that seem to be struggling right now. And it's interesting as you got to remember, the Fed has been taking money out of the economy. We had this huge surplus of money that was created by COVID that's winding down, right? It's almost out. That's why we keep talking about March. March is kind of like, okay, all that excess money runs out. Then what happens? Bank lending actually fell last month, and that's a big indicator. When loan volumes start dropping at the banks, that's growth in the future. Where that's companies saying, hey, I want to borrow money because I'm going to be building. I want to start building. I'm going to build a new plant, or I'm going to expand, or I'm going to buy new equipment, things of that nature, Jason. And it's starting to really start to slow down. And again, that's why the Wall Street keeps thinking there's got to be rate cuts coming, because the plumbing for the financial system. Remember, Lehman Brothers went under. Why? It was the plumbing of the financial system that wasn't working. That's what they're worried about happening again. Patriot Radio News Hour. We'll be back. 800-951-0592. A quick look in. The Dow is up today, up 150 points. The S&P's up 16. The Nasdaq's up 74. The bond yields have come off today. It's crazy how they move. 409 on the bond yields. Crude oil's up $1.60. I think a lot of that having to do with what's going on over there in Yemen. Gold's down $3 right now, 2026. Silver's off 40 cents at $22.28. And then crypto taking on the chin today. Bitcoin down 1,200 points. Don't forget about our friends over at YREI. Up to 10.25% fixed rates of return, not correlated to Wall Street. So another way to diversify, right? You got to have your gold and silver, right? Get your money with Joey. Check out YREI, right? These are ways that you can really be smart and get great rates of return, not correlated to Wall Street. They don't care if the Fed raises rates, lowers rates, if the government goes another $2 trillion, $3 trillion, $4 trillion into debt. They don't care about any of that stuff. Now, you got to have a minimum of $50,000, but check them out. InvestYREFI.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI24. And speaking of debt, Jason, a blowout number on the deficit in December. Next week, the Treasury needs to have another special auction where they need to sell more debt, because all as they did is drain their checkbook, and they need to restock it again. So think about this. I mean, the deficit could have been even worse if the Treasury, let's just say they started with $700 billion. And then they said, hey, we went another $140 billion into debt in December. Well, but wait a minute. You don't have $700 billion in your checkbook. They have, who knows, what is it? Maybe they got 575 billion. So, you really went into debt a lot more than that, didn't you, right? And this is every, 2-3 times a year now, Jason, they need to reload the checkbook. That is coming next week. They'll probably be able to take, hopefully, I don't know, we'll see, hopefully take the next quarter up, because that's, April 15th, right? Taxes to be paid. But this is something now, this is becoming the norm now, where the Treasury, hey, 2-3 times a year, we need to have these special events to keep money in the checking account of the federal government.
Yeah, the government's kind of like kind of like a preteen or a teenager, waiting for allowance to show up every few months. Isn't that what it is? Waiting for grandma to slip a little something into the checking account so you have some spending money. Isn't that how it feels? We have children running the budgets in the federal government, always waiting for some extra money to come in. It's obviously not the tax revenue ain't doing it, right, Joe? It's not the tax revenue doing it. It's always just grandma putting the lunch lady, right? The lunch lady, Janet Yellen, slipping a little extra into grandson's checking account to pay for a few extra toys to blow things up, right?
Yeah, and it's something where as we continue to struggle here, now we're still doing it. Let's not kid ourselves. We're still selling our debt. But every year, it gets a little harder, a little harder, a little harder. We're seeing all these central banks buying gold, right? So what are they getting rid of? Dollars. We're seeing the emergence of BRICS. There was a big article over the weekend about them making new inroads now in Africa, where now the use of the renminbi is starting to gain momentum as China. Well, let's face it, right? They're the ones putting money in there. They're the ones investing in these African nations and in the trade. It's all having an effect, right? I don't think it's any one thing. Obviously, the amount of deficit, this is ridiculous. You go into this kind of debt in an emergency. We're going into more debt than we did during the financial crisis. I mean, think about that. Right? I mean, think about when everybody was losing their homes. We didn't go into this much debt. We were warring in Iraq and Afghanistan, and we didn't go into this kind of debt. I mean, we're talking about the only year worse was when we decided, hey, nobody can go to work and let's shut down the economy. Otherwise, Jason, this is record-level deficit spending, and it's just not sustainable. And look at the difficulties we have now. They can't even pass a budget. Because what's the point? Right at the end of the day, they all know the spending's gotten ridiculous.
But yet they still want more, and they still want to raise their allowance every few months more. It's worse than a drug addict, Joe. I mean, I see drug addicts that have more control over their habit than these guys. They want more, Joe. They just want more. What is the comment I heard? I saw a comment about the unpayable debts, and they're like, well, it's not really unpayable until you don't pay it. That was the comment. It's not really unpayable until you don't pay it. Well, we're waiting for that day, right, Joe? And one of these days, it won't be called a bankruptcy, but it's coming. We had a bankruptcy in 1933. We had a bankruptcy in 1971. We're due. We're overdue for the next one, and they'll call it something else, right, Joe? The Great Reset or whatever.
Oh, right? New currency. It's a new currency, right? That's a new currency. Whatever they want to put on. That's why we keep telling you. Having excess money, you heard Joey say it, right? Having excess money in these banks it's just not a great place to be, because this whole thing is predicated on it. It's a debt money system. I mean, this is the problem when, why did our founding fathers not want to have the bankers be leery of the money changers? Don't let them be in charge, because they knew that this is how it works, right? The Boston Tea Party, believe me, had nothing to do with tea and taxes. It had to do with fiat money, script money. I mean, that's what it had to do with. And Jason, we're facing it again. And there's no good choice. I at the end of the day, I don't know. I guess at this point, what do you do? Right? Well, you're doing $2 trillion. What's 2.5? Right? Well, how about $3 trillion? Right? What's the alternative? Obviously, could you imagine what could the government even cut to get a balanced budget? That's something. Why no one talks about a balanced budget? Because they're like, well, we're going to get rid of Social Security and Medicare and Medicaid? I mean, that's kind of what we're talking about. Patriot Radio News Hour. No, not final. I've got a couple more segments. We'll be right back. 800-951-0592 to people out there, all you preppers out there. I know there's a lot of you out there. For those of you that are smart enough to think that, hey, you know what? I see the writing on the wall. It's coming. It's just, that's the next step here for the banks as these debts are. I mean, it's incredible. Think about it. Every 90 days, here's $1 trillion. Here's $1 trillion, another $1 trillion, right? Oh, wait, it was a revenue quarter. Oh, it's only half a $1 trillion in debt, and the numbers just keep getting worse and worse and worse. Listen, 2026, 2027, we got a Medicare Medicaid problem that nobody wants to talk about. By 2030, believe me, we got a Social Security problem. It's 2024. People need to wake up and realize what's happening out there. We got silver down about 40 cents right now. We've had silver dimes on sale over the weekend at $95 a roll. I just changed them. $90 a roll. You buy 25 rolls or more of dimes, $85, which, I mean, Jason, it's just incredible when you think about being able to do that at $85. You're talking about paying like $23, a little over $23.75, right? And you got spot silver at $22.35.
Yeah, it's a great time to buy. It's been a great time to buy the last couple of years, and I'm just going to keep on urging people. It's begging for you to buy it, and I'm surprised at the lack of customers that we should have during such a period. But the day's coming, Joe, and it's probably coming later this year when it starts to move. And when it starts to move, it ain't going to stop moving for a while. And we're going to see all-time record highs in silver, all-time record highs in gold. And the price on silver dimes being below $100 a roll is going to seem laughable. A couple of years from now, if our memories are strong enough, we'll be like, you know what, I remember just for that short time, we got under $100 for a roll of dimes back in 2024. You know, the beginning of that cycle, yeah, that's right at the beginning of that cycle, right? Because that cycle's starting this year, Joe. I'm convinced at some point this year you're going to see things take off, and it's because the Fed can't control a dying fiat currency. They're going to have to change it. They're going to have to bankrupt the whole thing and disguise it as, oh, we don't need these Federal Reserve notes. We need this digital currency and these other things we're going to tweak. And it ain't our fault. And it'll take off, Joe. It'll take off like as you look at 1933 when they immediately changed it from $20 for an ounce of gold to $35, essentially doubling it. Right. Then in 1971, if you look at $40 an ounce for gold, and just a few years later, it's like $800 and $300 and $400 an ounce, depending on the year. That's coming right now. People don't. It's just history repeating itself, and it's a short history. It's less than 100 years, Joe, that we're looking at this.
800-951-0592. How bad is it when it comes to and I keep talking about the plumbing of the system, the debt money system. In an attempt now to try to hide how bad things are, as we told you, this emergency lending program from the banks ends in March. By the time we get to March, at the pace we're going, we're going to be well over 200, maybe 250. Heaven forbid if we get to $300 billion. The FDIC's got like $120 billion. That's it. But then it shifts, and they're going to have to go to the discount window. And this is a window that tells you that, hey, the banks are in trouble. You don't want to be a part of it. Regulators now are making an attempt that is going to force all the banks to use the discount window as a way to change the perception and the stigma that comes with having to use it. In other words, so now here's their latest trick. Hey, well, if we just force every bank to use the window, therefore you won't know who the bad banks are. Of course, they don't tell you who's using it. But Jason, I think this is another indication. They already know what's coming. And my guess is the reason why this is happening, why they're talking about, hey, let's come up with a way that forces every bank to have to use it. My guess is hundreds, maybe thousands, and we only got 4,000 banks, may have to go and start using this facility, Jason, just to stay in business.
Yeah, well, well, they're going to close these facilities down, pretty soon. So why do I get the feeling they've got something planned at the end of this one? But you're right. At the end of this facility, this is a reserve that's there because of what happened in 2020. The massive printing that happened in 2020. So this is what's left over from that. So I guess we're heading for another one of these. Are we heading for hey, we're going to print $8 trillion this time? And amidst what emergency are they going to mask this one? Because I really think the COVID meltdown was very much about covering an economic mess more than it was actually trying to public safety worldwide. It was a worldwide economic mess. They just they didn't want to look like the housing crash, Joe.
I think it's coming again. Not only will the repo end, obviously because it runs out of money, the quantitative tightening is going to end. We're going to go right back to quantitative easing. That's just my guess. Because you got to understand, why are the banks using these facilities? And it's very simple. They don't have the liquidity to pay all the payments that need to be made. And if they sell the debts, they lose money. They're essentially, it's classic definition of insolvency, right? We don't have the money to pay our bills, and the stuff we can sell, right, we're going to lose our you-know-what and go out of business. Patriot Radio News Hour. We'll be back. Final segment. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Monday. And news over the weekend now. They're trying to figure out a way to force all the banks to use the discount window. And again, why do you use the discount window? Why do you use the emergency bank fund? The answer is simple. You have people that are either one of three things. Hey, I'm paying bills, right, so money's coming out of my account. I'm pulling money, right? Hey, I just got too much money in this bank. I'm going to go somewhere else. I'm going to diversify. Big depositors, right? And then the last of this is just simply, hey, you know what? At the end of the day, profits are down. My average balance is just less, right? So I'm paying bills. I'm pulling deposits. My average balance is just less. There's less money for these banks, and they don't have enough. They don't have enough. Normally what they're supposed to do is sell their debt, right? We talked about this, Tier 1, Tier 2, Tier 3. The problem that they have is all of these banks, all of them, all of that debt's underwater. So in order for them to do it, think about what we're talking about. Let's just say a bank, they're $1 billion short today. They gotta sell $1 billion. No matter what they pick, right? They're like, man, well, we're going to lose $100 million on this, right? If we got to sell $10 billion, we're going to lose $1 billion. For the vast majority of these banks, it's one thing for J.P. Morgan, B of A, right? The bigger banks, they can do that. But you know what? We've only got like 8 of those, really, more like 6. Because then you got like Goldman and Schwab and all these. I mean, we don't really have that many real big banks. The vast majority of these banks, Jason, they can't take a loss like that. They'll be out of it. Think about it this way. At the end of the day, you got to pay your bills. You're out of money. You still got more bills. You got to sell something. Maybe you got to sell your car. Right, you gotta sell some clothes, right? You gotta sell some jewelry, whatever. You gotta sell something to make ends meet. And for you, loss, not a loss. I gotta sell it because I gotta pay my bills. And right now, for these banks, if they sell it, Jason, they'll end up saying, well, gosh, we're insolvent, and now the government, the Federal Reserve, the FDIC are trying to come up with creative ways for us not to realize that they're insolvent. And look at Wall Street's at an all-time high. At the same time, they're talking about, well, we got to force everybody to use the discount window.
If they lower rates, Joe, to help with some of this mess. And I think there's hardly anyone buying. You've been reporting the auctions. There's not a lot of buyers for these treasuries. I think the Fed's balance sheet starts to go up. That'll be where it all goes. What is at the end of this year? Wouldn't be surprised if the Fed's balance sheet was $12 trillion, right? $13 trillion. Hey, there's a war going on. Oh, we got to buy everything we possibly can to keep the markets floating. Are we heading that way, Joe? But hey, there is one buyer. There is one buyer, and they don't have to actually put any skin in the game to buy them.
Yep. Silver dimes, rolls of 50 silver dimes, $90. Buy 24 or more, $85 at 800-951-0592. Jason and I, we're coming right back with the Half Empty Cup.